This is Matthew Kratter's Bitcoin University. Today I want to answer the question, is Bitcoin too volatile to be money? This came up in the context of our discussion of Bitcoin's HODL culture late last week. And there's this question, hello, I'm new and started to hold Bitcoin this year. My question is, with Bitcoin being so volatile, if you pay in Bitcoin one day, a chocolate bar could cost X amount of coin, but the next it could be drastically different. Do you see Bitcoin stabilizing? Otherwise, it would be a terrible currency due to its unpredictable volatility. If we want to compare a weekly chart of Bitcoin versus the US dollar with the yen versus the US dollar, we could reasonably conclude that the Japanese yen is too volatile to be money. Just look at that. I don't know how people survive in Japan, but this is probably why Japan no longer exists. It only exists in anime. But if we look at Bitcoin's volatility, it's gone down over time. Back in the first 5 years of Bitcoin's history, it had much higher volatility, and we can see that volatility trending over time. Now, why is Bitcoin as volatile as it is? Well, one way of thinking about it, you can think of Bitcoin as like a swimming pool. It's fairly small amount of capital, just $1.1 trillion at this point, while other global assets are really the ocean. We have gold at 13 trillion, equities at approximately 130 trillion, bonds at 315 trillion, real estate at 375 trillion. These are global approximate numbers. So Bitcoin is currently at roughly 0.13% of global investment assets. And it only takes a few small inflows and outflows from the ocean of these global assets going into Bitcoin for the ocean to completely overwhelm the swimming pool, both going in and going back out. If you're finding this video helpful so far, just pause here to ask you to help to support the channel. Click the subscribe button, leave a like, leave a comment, question, suggestion for a future video, and share this video with a friend or family member. So just 1% of global bonds, of the global bond market cap moving into Bitcoin would be approximately $3.15 trillion worth of inflows, which itself is almost 3 times Bitcoin's current market cap. And that would just be if 1% of bonds made their way globally into Bitcoin. Some common misconceptions about this: 3 trillion moving into Bitcoin does not just increase its market cap by only 3 trillion. This isn't true. There's usually some kind of multiplier effect that various people try to attach permanent numbers to, but it really does depend on how relatively aggressive buyers are compared to sellers. Prices, we always say on this channel, is always set at the margin by the marginal buyer and seller coming to an agreement where to exchange fiat for Bitcoin. And if sellers pull their offers, an asset like Bitcoin can instantly increase its market cap by much more than the inflows. We see this all the time with gap ups and gap downs after market stock earnings reports, where all the people who are offering at certain prices pull their offers and then the price gaps up in this case. So something like this, it can happen to Bitcoin. $3 trillion worth of market cap bleeding out of bonds into Bitcoin would probably make Bitcoin go up 2, 3, 4, 5x rather than just the 3 trillion. Either way, Bitcoin's market cap is still quite small relative to the ocean of global assets. And this is really what contributes a lot to the volatility. Also, the fact that Bitcoin is a purely free market that's not manipulated, it's not controlled by a central bank. The price is set globally and no one can control the price of Bitcoin. Now, the world is slowly moving out of analog assets and poor stores of value like bonds and real estate and into the world's preeminent digital asset, which is Bitcoin. It's not a smooth linear path. It never is, and it never was for the big tech stocks, for example, in their early years. Amazon is another example of an asset that started off extremely volatile and then became less and less volatile over time as its market cap grew. So it's never a smooth linear path. There's always volatility and chop as the market constantly alternates between fear and greed. But I think with Bitcoin, we can be sure of 2 things. Number one, fiat will continue to die. Fiat money like US dollars and euros and pounds will continue to die, and Bitcoin will continue to take market share. Now, fiat's death rattle may lead to even greater volatility over the medium term. And if you've read the book, When Money Dies, we saw this happen in Weimar, Germany after World War I. It's a great book. I'll put a link in the description notes below if you haven't read it yet. There's the 1975 edition, and then there's a revised edition, which is quite good, which came out in 2010. And we can see here the price of physical gold priced in Papiermark in Weimar, Germany in the late, really going from the start of World War I, 1914, all the way to the terrible years of 1923 and 1924 when the Weimar Papiermark was essentially demonetized. And so this went from the price of gold in Weimar marks, in Papiermark, was 1 mark per whatever the measurement of gold is here, ounce of gold. And then it went to, I believe this is a trillion here, over just about 10 years. But we can see here, that's the black line, the appreciation of gold priced in Papiermark. But what happened is the path was extremely volatile, and that's what this lighter color is here. This is the percentage change in gold's price in Papiermark monthly, and we can see there are gigantic melt-ups and gigantic drawdowns, and this is why it's very important. We believe Bitcoin will follow a similar path, and as the fiat currency, the local fiat currency, or whatever you're pricing Bitcoin in, dies, you can end up with a lot more volatility than you might expect, even though the end goal is pretty much guaranteed. And the end goal for gold priced in Papiermarks was always going to be going to infinity. It went to 1 trillion, then it went to 10 trillion, and now Papiermarks are completely worthless, obviously. Only the path was uncertain and volatile, not the end goal for gold priced in Papiermarks. And the same is true for for Bitcoin priced in fiat. The end goal is certain, I believe, which is a world on a Bitcoin standard, but the path to that end goal is volatile and unpredictable, and this is why we always dollar cost average into Bitcoin. We don't try to time the market. As Jack Bogle used to say about the stock market, timing the market is greater and beats timing the market. So this is why Bitcoiners hodl. This is why we've developed this hodl culture that we've been talking about. This is why we don't trade in and out of Bitcoin. And also this is why we don't use leverage, because we're expecting a path like this to $10 million Bitcoin. We're going to get there and we'll go beyond that, but it's going to be a very volatile path. And I think people always get the framing wrong here. It's not about protecting your money by picking when to enter and when to exit Bitcoin. It's more about protecting your money by exiting fiat completely. As Michael Saylor says, Bitcoin is the exit. You never come back from it, because you'd be exchanging a very strong money for a very weak money if you came back. This is a very important warning to keep in mind. Keep only as much money in US dollars and other fiat money as you are willing to lose. This seems like an absurd thing to say, just as it would have been an absurd thing to say in 1914 in Germany, right as World War I was breaking out. But this is, I believe, what is going to happen to the US dollar as well. So keep only as much money in US dollars as you're willing to lose. Eventually, the whole world's going to wake up to this reality, and that's when Bitcoin's price really will go to infinity in fiat terms. Now, countervailing force to price volatility as we experience it, this price volatility that's being caused and will be caused by fiat's death rattle, as we saw in Weimar Germany, a countervailing force to this volatility is the move to a Bitcoin circular economy, which is something eventually everyone will do. And a lot of us are in the process of moving to living on a Bitcoin circular economy or Bitcoin standard. For many of us, Bitcoin's price volatility is becoming more and more relevant as we move our personal financial lives onto a Bitcoin standard. Eventually, everyone, I think, will be there. And so in the future, you won't buy Bitcoin, you'll earn it. In the future, you won't sell your Bitcoin for fiat, rather you'll spend it for goods and services. And as you have more and more Bitcoin coming in and flowing out of your personal and business coffers, its fiat exchange rate will matter less and less over time, because you'll just be pricing everything in Bitcoin. I think in a similar way as those few people in Weimar Germany who were earning gold and spending gold, if these people in fact existed, they did not have to worry as much about the fiat exchange rate of the Weimar Papiermark. The conclusion, the funny thing is that even measured in fiat, most of Bitcoin's volatility has always been to the upside. So you really have a choice. You can learn to live with Bitcoin's fiat price volatility as you get richer and richer over time in terms of purchasing power, or you can have a nice, comfortable, non-volatile life as your net worth and purchasing power trend to zero. And this is the path of holding US dollars and other inferior currencies, other inferior fiat money compared to Bitcoin. You'll have a very nice non-volatile life, but you will get poorer over time as inflation eats into your purchasing power. There's going to be a light video scheduled this week due to my traveling. Hopefully see you on this Wednesday, with the next video. If you enjoyed this video, be sure to hit the subscribe and like buttons. Hit the notification bell if you want to be notified when I publish my next video. And let me know your questions and comments in the comment section below. Thanks all for watching, and I'll see you in the next video.